Morning traders, Paul here with GammaEdge. Today is Tuesday, the 27th of September. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Market model. All signals remain in short or cash mode. Of course, paper trades. Nothing here is a recommendation to buy or sell any security. The cumulative tick model remains in this railroad track down pattern. You'll see it on the next slide. Despite this, we are in a oversold condition or pounding the bottoms. We can remain here for a while, so watch for crossing of the short-term moving averages from below, and this could be a reversal signal. Also, watch for a continuation to the downside. We have no indications right now that selling has stopped. Something I want to draw your attention to, the VVIX and the VIX are extremely elevated relative to recent history, but that can continue and it can get worse. We are watching for an opportunity to short the VIX above a 2.3 standard deviation. That usually is a good number. Of course, paper trades only. GEX ratios, we are hammering the low numbers, which signal a good opportunity to get in. But again, just note this is driven by the ratio of the short-term calls to the short-term puts. There is no sense of if there is no sense to an upside by the market, the GEX ratio will remain low, and so we need to see day-over-day movement and have this correlate with the short-term CT. Here's the market model. This is using the ARCX long-term. Everything's pointed down, negative slopes, so that's in a cash or short mode. The intermediate term is well below the historical moving averages, so that too is turned off. We're in a downtrend. And then here, the short term, you can see we finished on the lows of the day. We've got this railroad track pattern down. We're below the white moving averages. So that too is in a cash mode. If you took this signal, you're doing pretty well. The key here is to look for a reversal or a continuation, and we'll see where we go. The VIX and the VVIX, this is what I was talking about. This is the VVIX on top. The top green line that you see here is the 2.3 standard deviation. That's important. Long bars, we're pushing up. Volatility is exploding. Note, this is the 2 standard deviation here on the VIX. We're looking to see that it stays up here. We may have missed an entry here. We're looking to see another push upward. If we get it, we're probably going to take a few paper trades to the downside. Downside for the VIX, that is. GEX ratios, as I said, we're at lows. We can continue lower. This is the SPX. Here's the index, basically the NAS. And over here you can see IWM, the SPY, the Qs, and you can see the VIX is actually pushing higher up here. So when we see this ratio coming down into this area, again, we can remain down in this area. We can continue on this downward pricing path, as you see. So this is not necessarily in isolation a signal to buy. It's correlational, but there is a good risk reward that we've extensively back tested to show that for the index ETFs, getting in at these levels or lower generally pans out pretty well. Key levels that we're watching here today, 4,300 remains the upside, 3,600 remains the downside. We are growing at 35 and 34. Excuse me. Here at 4,000, we still have COI, POI as the illiquid lines in the sand. They've been there for months. Note, we're still elevated, still pushing around 4%. Zero DTE today. Couple different areas. You can see a real big dominance of the negative or what we call put gamma. It's negative just because of the way we treat the isolation of puts and calls. When we see something like this, there are a couple of pockets that are developing here. You can see we closed just below this transition range. We have another pocket that is sitting down here that's developed recently, this 3560 range. Want to pay attention to that. In the zero DTE, 3560 is the downside. Limit. Beyond that, moneyness shifts a dramatic amount, and we could get a reversal to the upside. So we want to watch that 356, 3560 area just to see what's going to happen. When we take a look at the 1 DTE, so this will be the end of day Wednesday projection, we are seeing this 3585 area. This is not out of the question. You can see that we've opened some new strikes, opened Monday night, or Monday, I should say, or Monday overnight into today. And you can see where these are. And we're up here at this 3655. You can see this developing gamma line all the way down here at 3500. This is new. We have not seen something of this magnitude. This is significant. So we certainly want to pay attention to it. Now, this is the expiry for tomorrow, but nevertheless, we're seeing a lot of short-term go in there. To the upside, pretty weak. You can see right here that this we start this transitional phase right above this 3675, 3680, and it gets pretty messy. But even the 1 DTE expiry for the plus GEX is incredibly weak. Not seeing a lot of calls go in at this time. Not seeing this get negated at all. And so the bias clearly is to the downside. When we take a look at the combo, which is the AM and the PM settled SPX, we're just in a deep sea of red. This is all put-dominated gamma, what we're seeing here. Long range to go to the top of that gamma spread. So just look at up there at 3,800. We got a long way to go. Probably not going to happen today. You can see it's at 4%. And the expected move is projected around 4%. This is a conservative if you're a seller. It's aggressive if you are a buyer. Down here at 3,500, again, a lot of growth here. This has really emerged quite a bit since where we were yesterday. Want to pay attention to that. 3,600 still the line in the sand, but just given the distance down here and the growth of this is pretty significant, especially since the growth of this line is going to be dependent upon spot. So watch these key areas that I've highlighted. These are going to be accelerants either to the upside or to the downside as delta changes quite a bit as we move through these strikes. To the downside, things get really dicey. Better than they were yesterday, though. We're getting some support down here, which we did not have yesterday, which we feel is actually a positive outcome. Below 3,600 yesterday was problematic. Below 36 obviously opens the door to 35, but now that we're seeing this development down here, we're a little more comfortable that we're not going to have an extended collapse to the left. So with that, I'll leave you. If you have any questions, comments, suggestions for improvement, come on over to GammaEdge.us. That'll take you to a web page. Click on the pricing tab, fill that out, and it'll take you into the Discord. 14-day free trial, all the tools turned on. Welcome to have you. A lot of great traders, a lot of great information, a lot of tools available to everybody. Follow us on Twitter at GammaEdges with an S, and then here on YouTube, of course. If you like today's content, let me know by hitting that like button, and of course subscribe, because myself, Taylor, and Michael post content regularly. With that, I bid you farewell. Make it a great Tuesday. Be safe.